Hey y'all, Jen Hernandez, Loan with Jen. Today we are going to talk about the top deal killers on a mortgage loan. This is a must watch. Okay, we're back. The top deal killers on a mortgage loan. I've got 6 things that I've identified, so hang in there with me. If you are going to buy a house in the near future, you don't want to miss this. And also, please like, share, and subscribe. I release 2 videos per week that help homeowners with real facts, no BS. Okay, number 1, changing jobs from a W-2 employee to either contract or self-employed. This is deal killer number 1. Do not quit your job. You can go to another job that's another employee job. If you're going from W-2 to W-2, that's okay as long as we know about the new information. But if you are going contract or going to own your own company, you'll be denied immediately. There will be no loan. So please think twice before you're going to do that. Buy the house first. Make employment changes later if you can all help it, okay? Now, deal killer number 2, again, we're talking about top deal killers on a mortgage loan, okay? Number 2, large purchases on credit prior to closing. The reason this could be a deal killer is that it could add to your monthly income if your debt to income ratio is tight already. We had a client that just had to go to the Grammys. She was so dear to us and we loved her, but she's like, no, I gotta go to the Grammys and put it all on my credit card. And I was like, what? Had another client that his whole immediate family needed like dental work and all kinds of things. He put $70,000 on his credit card the week before closing. Now, luckily he still qualified, but we had to scramble to get all those debts. So please, please, please do not put a bunch of stuff on your credit card or go get new loans. It could definitely disqualify you. So talk to your lender before you do things like that, okay? Now, top deal killer number 3 is that your money for closing is not from a verifiable source. So make sure you talk to your lender in the beginning. Listen, y'all, we're gonna find out anyway all the secrets about your money. You might as well come clean with us in the beginning. So things must be verified from a verifiable source. It has to be either a gift or money from your paychecks or savings that you've had, just over time. It can be a 401k loan, but it cannot be a line of credit. You cannot take out more credit to buy a house. It cannot be cash that just showed up in your account. So if you've got money moving around, if you've got money under the mattress, you got to talk to your lender about it to see if there's some alternate ways, requirements, okay? All right. Another deal killer, again, we're talking about top deal killers. We're on number 4. We've got 6 total, so hang in there with me. So number 4 is undisclosed properties. On the loan application, we find that when we're doing the application in the beginning, clients just don't think that it's necessary for us to know that they have property that they either inherited, they've got a lot, acreage, timeshare, because they don't have a loan on it. Well, that is not true. So this is somewhere where I want to let you know we are going to find out eventually, because we do searches behind the scenes, but sometimes it takes a week for all of that to come to fruition. We certainly don't want to have your earnest money at risk. So please, 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 if you have ownership in any type of a property, even if you share it with siblings or it's inherited, anything at all, please let your lender know. It does not matter that there's not a loan on it, okay? We need to know about everything. Number 5, we're almost there, y'all. We've got 2 to go. Number 5, expired ID. We have had clients that have expired driver's license, passport. They get to the closing. The title company cannot notarize your documents without ID. In Texas, where I'm from and I work, spouses have to sign whether they're on the loan or not. Every state is different, so check with your state, check with your lender in your state. But spouses have to have unexpired ID as well. So make sure that your ID is not going to expire prior to closing, okay? So go renew it, get it renewed. All right, the very last one. We are in number 6 of top deal killers on your mortgage loan. Number 6, the use of property. So make sure that you're being very forthcoming on your use of the property. The lender sometimes, just through investigation, they might give you a counter offer because they are suspicious that people, we do have people that are purchasing a home for a child or something and say, oh, it's going to be my second home. Well, you can't do that. It's an investment property. So whether it's going to be a primary, a secondary, an investment property, it's very important to talk about those things in the beginning with whatever is really going to happen. If the co-signer is really definitely going to live with you, well, then say that. What we don't want to happen is the co-signer is not going to live with you. You definitely wouldn't want to say that. So sometimes use of property details get convoluted. We want to make sure that it's completely accurate. We're all signing a federal loan application, and we want to make sure that is not going to give y'all problems later on, okay? So that's top deal killer number 6. So I've gone through these 6 things that we see, and we want to make sure that you stay in the safe zone and that your transaction is not in jeopardy. If you have any questions, definitely talk to your mortgage lender in your state or city. Hope that you like this video. Like, share, and subscribe, please. And we'll talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.